Hello and welcome to a brand new edition of Marmore's podcast series. We have with us Rakesh, who's an analyst at Marmore. Hi Rakesh.
Hi Prashant.
Now we're going to talk about Islamic finance in this particular series, particularly in the GCC region.
Yes.
Talking about Islamic finance, can you enlighten us on the features of Islamic finance?
See, Islamic finance is something which has been designed to be in compliance with the Sharia law.
Right.
So there are certain restrictions in Sharia law. For example, the interest that's prohibited under Sharia law, and investments in uncertainty or ambiguous contracts are prohibited. By definition, the investments in virtual assets such as indices or option contracts, they are prohibited. The gist of the essence of the Sharia law is that there should be some kind of an exchange of physical goods between the buyer or the seller, and it cannot be just based on virtual items such as an index or an option contract.
Right. So my understanding is that the underlying asset should be a tangible asset in Islamic finance.
Yes.
Right.
There are some differences of opinion between Islamic scholars as to what is allowed and what is not allowed, but in general this is what it's being followed. Let me just give you an example of how a bank deposit works in an Islamic finance environment. In a conventional banking scenario, a customer goes to the bank, he deposits his money and he gets a predetermined interest rate. So, but in case of an Islamic bank, what happens is the customer goes to the bank and he deposits his money, but the profit that what is earned as interest, that there is no interest concept. So what happens is the bank enters into a profit and loss arrangement.
Right.
And the returns are shared based on that profit and loss arrangement.
Interesting. That is very lucidly explained, Rakesh. Talking about, we are all familiar with the conventional financing, conventional banking. Now, can you tell us some of the differences between the conventional and the Islamic financing?
Yes. See, in Islamic finance, the investors and fund managers, they are encouraged to take socially responsible choices and avoid investments in certain companies. For example, if it's too risky or if it's prohibited under Sharia law, that's not allowed.
So stability is
the key.
Right.
When we mean stability, there is no
room for speculation.
Yeah. And one more key point is that Islamic finance views profit as one of the reasons, and not the absolute reason for the existence for investing.
So there's a lot of social elements built into Islamic financing.
Yes.
Right. That's nice. Now, talking about the growth trend in Islamic banking, Islamic assets, can you share some numbers of how the trend has gone in the past years?
Okay. As of 2012, the total Islamic assets is around $1.7 trillion US.
Right. That's quite huge, right?
And compared to the previous year, it has grown by 18%.
It's basically the front runner when it comes to...
And in the past 4 years, it has actually grown at over 25%. On an annualized basis.
Fantastic. So is it due to the base effect, or is it just that Islamic finance outperformed the conventional finance in the recent years?
See, the Islamic banking has actually got much of an acceptance.
Right.
That has been the main growth engine for total growth of the Islamic finance assets.
Right.
Islamic banking is a part of the global Islamic finance universe.
Sure.
Let me just give you some numbers on the Islamic banking assets.
Sure.
Currently, we have around 1.5 trillion, which was around 822 billion at the end of the financial crisis.
Right.
So it's almost doubled in the past 4 years. And it would be interesting to note that almost 81% of the assets of the Islamic finance belongs to Islamic banking. It's followed by Sukuks and Islamic Bonds, and then we have this Takaful insurance.
Right. And can you tell us the spread of Islamic finance in the GCC region? I'm guessing that Saudi is going to be the leader.
No, it is actually not. Surprisingly, it's Iran, which has got 36% of the market share in Islamic finance.
That's quite surprising.
Yes. And the big three, that's Iran, Saudi Arabia and Malaysia. That's only the big Asian country in there. They control around 64% of the combined assets of the Islamic finance industry.
Iran at 36% really surprised me, Rakesh.
Yeah.
Let's go a little deeper into the Islamic finance products. Can you tell us the growth trend in the Takaful market in the recent years? But before that, could you highlight to us what Takaful is?
Yes, the Takaful insurance is based on the Islamic principles of Sharia, which actually gives a much more emphasis on mutual insurance. The members join together and they contribute towards the fund. And then what happens is when one of the members they suffer a loss, they get compensated.
Right.
There is a common third party who takes care of running the fund, who's called the fund manager. So basically, we have got three models by which the fund manager is compensated. One, we have the Mudarba model, where a profit is shared to the fund manager.
Right.
And then we have this Wakala model, where the agent receives only a management fee.
Right.
There's no profit sharing involved. And there's also this hybrid model where both a part will be paid through profit sharing and there will be a fixed management fee.
Right.
That is involved.
So I can see a lot of differences between the conventional insurance and the Islamic insurance.
There are a lot of.
Right. Now, can you talk us through Islamic mutual funds and how these funds differ from the regular mutual funds?
Yes. See, an Islamic mutual fund, it's very much similar to a conventional mutual fund, except that the structure of the conventional mutual fund, it doesn't change based on the investment, be it equity or debt. But in an Islamic mutual fund concept, the mutual fund is classified based on different structures for different investments.
Right.
So that's how it works in Islamic mutual funds.
Can you tell us some of these structures?
So, for example, based on the investment type and financing method, we can say there is this Murbaha, Musyaraka, and Baisalam, so on and so forth.
Right.
And then based on field of investment, where they are going to invest in public works, real estate, or leasing. And then based on period of investment and even on the risk. So these are the kind of sub-classifications that are available in Islamic mutual funds.
Right. So I can see a lot of differences between the normal mutual funds that operate in the conventional financing and the Islamic mutual funds.
There are a lot of difference in the structure.
Right. Now, can you give us a sense of the numbers and the growth in the recent years?
See, the Islamic fund management industry has grown by 3.5% in 2011. The total assets, I would say it's around 60 billion US dollars in 2011 compared to 58 billion in 2000.
So that's slow and steady, right?
It's slow and it's a very minuscule part when you compare it to the global conventional mutual funds.
Right, and it's a new concept.
It's a new concept.
Right. Thank you, Rakesh.
Thank you, Prashant.
So that's it from us. Until the next edition of Mamo's podcast. Thank you so much.
Thank you.